All right, ladies and gentlemen, you already remember the face. I mean, you remember the torso too. We were talking about that, but it's Hugh Hendry. I hope you know about him by now, but we are doing part two. We're going to talk a little bit about what we talked about last time. That was in the middle of the banking collapse and everything else going on, but now we got a couple of other things happening in the world, from debt ceiling to even NVIDIA up $200 billion. I mean, the day we're doing this, we're even doing this on a crazy day. So, Hugh, how are you living, man? How has it been? It looks like you're at a new location this time, too. It's looking beautiful out there.
Yep, Josh, my brother, great to be back. The last time we spoke, I was in Malibu, and now I'm in St. Bart's. I mean, where's my violin? My life is, is so tough. I've been on the road for 3 months. I got back to my spiritual French home this week, and I'm ready, Josh. Bring it on.
Yeah, you're ready? All right, let's go. Number one, everybody's talking about it, debt ceiling. I feel like we have to talk about it. I know, it's not supposed to happen. It's going to, I grew up in the era of this, so like 2011, 2013, I was a younger guy getting into stocks and all that. So I saw a different episode of it, but what do you think right now? I mean, if we get a deal or not tomorrow, there's only a couple days till the supposed X date. I mean, where do you stand on this right now?
I mean, it's like taking a plane trip, of which I take many. It's the assignment of probabilities. You can't say never, and yet we fly. I fly high.
Hey, wow.
It's going to be resolved. I think it will be resolved Friday.
Tomorrow.
If it's tomorrow, yeah, tomorrow. Yeah. If or today, it's the folk watch this. If it's not, we got the Memorial weekend. We start trading in Tuesday. If they don't resolve it tomorrow, the equity market will come down hard. The equity market will just start breaking things until the knuckleheads get a deal. But we'll get a deal.
So, but even in the same respect to the analogy, flying. So you're not worried about the turbulence, and you're not worried about the pilot either, or anybody else on the crew.
I'm worried about the damn pilot. I mean, they're all damn crazy. And turbulence. Yeah. I mean, I've got my seatbelt on. I mean, I'm out there staking my reputation on the 30-year treasuries or the TLT, and those suckers are bleeding.
Okay, and that's all right. Perfect, great segue, because literally, I want to talk about the bonds now. And I mean, this last couple weeks, I mean, it's been like part of the debt ceiling. People are worried about, like, what do you think about the refunding now? So, like, if depending on the resolution, how do you think that's going to play out for the bonds and the tilts and everything else?
Yeah, I mean, like, the ordinary folk they've been peddled like this kind of fantasy nonsense. Again, folks, remember, right? The talking heads, the people they interview on TV, the guys and the ladies that wear suits, the Palm Springs Pearl set. I watched something yesterday. Oh my God! Someone sent me a link on Twitter, and it was Goldman Sachs head of anti-wealth. And she's like, we think this is the point in the cycle. We call it the bend. It's not the break. I mean, cute slogan, but bad banana. What was the question again, Josh?
How are you feeling about, with the bonds right now? Do you think
the bonds? Yeah.
And the refunding with the treasury.
Oh my God, but years are going to go higher because they're going to sell so many treasuries. That is misleading. Okay, so
see, there you go. That's a hot take. That's a hot take. What do you?
I want the good folk to go onto the www and look up Say's law, Says, a French economist, dead a long time ago, but a cute little statement that supply creates its own demand. Okay, so let me put that into context. The environment that creates the supply. And what is the supply? The supply is of treasuries. It typically comes in a bad economic environment, and the Treasury's got to step up and spend because no one else wants to spend. It's got to, like Atlas is trying to support and hold the ecosystem up. And therefore, that coincides essentially with risk aversion. Like the people don't really want to take a lot of risk. And so once you take away like that tiny probability that the plane's going to go down,
Yeah.
then you reinstate the desire. And believe me, the desire presently is for riskless securities.
I agree. I
You
agree.
know, and that doesn't just mean government bonds. The manifestation of riskless in the stock market, is this absurd concentration of the returns in the S&P 500. Like 12 stocks have accounted for more of the gain, and indeed you mentioned Nvidia. Like, so today it's even more extreme. Probably the 12 stocks account for like 115% of the S&P's gains year to date. Why is that? It's because they're deemed to be riskless. Riskless in the sense that they are independent of the economic cycle. And forget the talking heads. If you're engaged in the economy, if you're an entrepreneur, if you have a business, you don't need me to tell you that the economy is soft. Yeah. So the supply thing is just like people peddle fears. I just try and peddle logic.
There's feel. So I love it. So you're saying the demand will be met. The demand, $700 billion, $1 trillion at refunding, it'll be met. And then now we get rid of the debt ceiling impasse. Nothing to worry about. Everyone's gonna eat it up, and that's what you're saying, right?
That's kind of what I'm saying. I mean, I was putting out today on the Twitter. I was like, I think the more important question is where do stocks go with the resolution? Yeah, because stocks have traded sideways for the last year.
Half a year, I know. I mean, that's kind of wicked. I've been
I
saying
think
that a
it's more than
lot.
half a year. I think it's a year, almost a year. And I think that's likely to continue. I mean, I put out a kind of trade idea, which was a call and a put spread, but it was kind of just like, grand old Duke of York. We've been trading at the kind of 6 month or 9 month highs, 430, I think, on the spider, or 420 on the spider. And the range is 420 360. Don't quote me, but ish, yeah. And I think we just we march them up to the top of the hill and we march them
Yeah.
down again. Why? Because the market presently doesn't want to go down. The Fed doesn't want to cut rates, and so I think in the immediate future we're just kind of go wiggly, and people are going to. But what happens is people buy highs and they sell lows. Market's just a distribution system. It's distributing your wealth to other people.
I hate to break it to you. That's pretty much. But let me ask you this: with even the wigglies and staying up here, because I agree with that to a degree. How would you apply that to the bonds? Do you think the same thing, that same scenario, could happen to yields right now? Even like tilt, is there a scenario where we kind of stay range bound even on the yields? If we go through this 6 months, 12 months, no cutting, but then no desire or apparent risk to go down, is there a scenario where the bonds then kind of do the same thing?
Yeah, I mean they've been doing this. I mean, well, okay. So the bonds have, if you look at the TLT and you look at the candles and what have you, they've been. I think they're marking a bottom. That may be my prejudice, okay, but we're employed to have a prejudice, and like I say, my reputation's on the line. But they've gone sideways. I mean, up and down, but sideways.
So you think though that previous high on like the 10-year or even like the 20-year, 30-year, you think the October high on yields is that's our bottom there, or the top on the yields?
Yeah, that's my bet. So I know the numbers better on the TLT, where I'm kind of trading the options. I'm long the kind of at the money January 25. So, I mean, a couple of things there. Trading options, please don't be a hero. If you're a hero, you're going to go to zero. You're just being a sucker. You're paying the man. they'll write those options to you every day. So it's like no more than 10% out of the money. Keep it real, folks. And if you're buying options, buy time. Like theta is such a killer. So that's why I'm kind of 100 strikes and I'm out to 2025 because things just take a long time to break.
Bro, you just said theater is a killer. I love it. I feel, amen. Option traders, I hope you heard that. I feel. Actually, let me even ask you this. When did you even start with like long duration bonds? Like, were you even trading these back in like 08, 07? How long I guess the fascination with the tilts, how long have we been focusing on this?
Yeah. So the tilts specifically, I came into this year and my slogan was "This market's easy." I may regret saying that, but it was meant to be kind of controversial. But this market's easy. Nothing in stocks, and you own like the TLT.
Well, I don't, but I still think to give you a little credit there, man. I think you're kind of right on the easy sense, going back to what we just said about the 5% bonds, 6% bonds. I mean, in a weird way, there's still the easy dynamic of you could sit there and still get a solid return if you're okay with missing out on 200 PE NVIDIA or just rocket ship, Well,
I mean, many things there again. The NVIDIA, I've had, I took so much troll and bad karma because I said to the community, if I had it all over again to do, my message, if I was my first year, actually I did this if I think about it. You got to get out the gates and you got to be a hero, a smart hero, okay? But what you want to find is something that is in a profound rocket ship uptrend. It'll be volatile, so you're going to have your wits around you. But you can't be launching a hedge fund and kind of targeting 10% returns because no one cares, right? So I got lucky. The rocket ship for me in 2003 was gold. My God, that was hard, but I made 50% and I got 15 years of running a fund. If we look at the kind of the 2 years after COVID or the 18 months, the rocket ship was Bitcoin. And lately it's NVIDIA. And I've been cutting up and playing around with some of the Stan, the legend, the greatest macro trader of living macro.
Mr. Druckenmiller?
Mr. Druckenmiller himself. And even Stan's saying, hey, listen, he's been around for over 30 years trading. He's been through bad recessions. He's been through when the S&P's lost 60%. There's always something going up. It might be staples. Back in the 70s, it was oil. If you go back earlier, defense companies, there's always kind of something. And Stan was like, don't tell me the fundamentals on NVIDIA. I just can't tell you, we're in an arms race with regard to AI, and we're in an arms race with microchips between the US and China, etc. And if the economy goes down, does NVIDIA go down? Don't know, question mark. So the challenge with rocket ships is do not impose your fundamentals. They always respect the legitimacy of the price trend. And what we saw overnight, the gap higher, the earnings it would seem exceptional. But the gap higher, just people were getting punished. You do not be a contrarian on an uptrend. So that's NVIDIA. On the bonds, let me tell you something staggering. The zeros, I think it's is it Templeton? One of the big houses got an ETF. And they strip the coupon off the treasuries and they offer you like the most profound duration. What is duration? Duration is the biggest bang for your dollar buck that you invest. So if interest rates move, I think it's ZRVO. You'll know it better than me, or ZRZO.
I know. I trade the shorter term one. So like Bill, I like Bill, and I like even IEF and anything there.
Yeah.
But is it a 30
It's longer. I mean, don't get me wrong. I like the dollar bill, y'all. But no, what you see, the problem is you don't have access to an ISDA contract. Okay, so you don't really have the leverage. And the problem is if you buy the short tenors, i.e., the anything less than 10 years, you can be right, but you don't make that much money.
Yeah.
And so to kind of amplify your return, you've got to take on more. We call it duration or maturity in terms of pushing the maturity date further and further.
We talked about this last time. We were talking the bang for your buck, but you're thinking the bang for your buck comes from the time on there, and that's what's
It does.
giving
No, I mean, it does. I mean, it's just a statistical, boring thing.
and that's where you can turn. So it's a smaller amount for a higher return rather than being right, small or big. But then if you're not leveraging it, you're not making a good return.
Well, I'm talking about, if you've got $10,000,
Yeah.
you will make a hell of a lot more if you're owning long maturity treasuries than you will owning dollar cash. So the stock I was talking about is ZROZ. It is 25-year plus a maturity. It's a zero coupon, so there's no yield. It's just price, baby, and we're in this for price, yeah? And it's fallen from 200 to 87. The comparison would be the TLT. It fell from 180.
You said this is ZROD or ZRZ?
No, ZROZ.
Interesting. Let me take
Think
a look.
it's ZROZ. It's too early to buy this.
Yeah, PIMCO. It's the 25 year plus ETF. Interesting. Because I look at TLT, I use all the other ones, whoever makes TLT, Shy, all those. I think it's Invesco.
We'll bring up a chart of these, and but what you'll see is the best thing you can say is they haven't made new lows in the last year. Everyone's been screaming inflation, and these are catastrophically bad assets to own if you think the future is inflationary. I happen to disagree, and that gives me the curiosity to want to be long. But again, I keep pleading with the good people trying to make a buck. You got to align your curiosity and your insight to the price trend. So clearly this is not trending higher. It's trended down, and then it's been trending sideways, and the expectation is going to trend higher. So I'm trying to align a lot of kind of disciplines. And so I say, at this point, I've got to have a call option. Okay. I'm just going to have a small amount of my money. Again, we're talking about bang for your buck, right?
Yeah.
And I'm saying I want to buy, I don't know, like 2 or 3% of my portfolio. I want to have that as call option premium. I don't worry what happens today, tomorrow, etc. I've got, how many days is it until January the 27th, 2025? Is a lot of days, a hell of a lot of days. And so I'm kind of sitting back. I'm like, I think I'm going to be right. Another point, but on those ZROZs, the borrow cost, so there's a lot of people shorting them because they think yields are going higher and higher.
Yeah. Net shorts even on the treasuries right now still.
Oh, yeah. Well, remember, like for every short, there is a long, but yeah. But the cost of the borrow on the 25-year plus is 14%. So you could actually sit there and you could own the underlying paper, and you could lend your stock to the short community.
Dude, honestly, that's what I was going to say. I was like, because it seems like these strategies too, we're talking leverage, but if you wanted to go less leverage but still have exposure, you could just straight up buy the ETF with shares, and then you limit. Now you even just eliminated the whole time factor too. So then, if anything, any theater, I love it, man. Theater kills, bro. And so I feel so if you were doing something bigger, or you just didn't want more leverage, you could. Would you agree with getting behind the shares, or are you thinking you only hit this with leverage options and then that's it?
Well, I'm saying that. So let me have a look at the TLT chart. I'm juggling between my screens. Let me put it in. Where is TLT today, being Thursday, the day before the folks are watching this? It's trading at 100. Yeah, like I said, I'm buying at the money, and to your point, like, why don't I just buy the paper? Why don't I buy the ETF? I need confirmation. So I'd want to increase my position kind of above 110. Like 110, we're going to the moon,
Yeah,
baby.
once you
We
get your
are.
trend, like you're saying, yeah,
Give me the
100%.
trend, and I will just amplify my risk position.
Mm-hmm.
And I'm comfortable because my call option will be paying me. You know, what is the return on the call option? If we go to 140. I mean, if like this is all just like
140. Yeah.
speculation on the future, I haven't seen the future. But at 140, I think you make like 3 times your money on that thing. So it's a leg in, which allows me to amplify and start taking the risk, which is gonna, it's gonna pay for my next vacation. Well, actually, it's gonna pay for my next divorce. Actually, no, I'm never getting married again.
That's funny, man. You're gonna think I'm a sicko with this trade because I like the tilt trade. I actually agree with you. I think it's just gonna be. I think we have to just sit through the shit show, let everybody go back again. That's why I'm so obsessed with that theater kills line, man. Because I think there's going to be a lot of pump fakes on the yield curve. I think there's going to be a lot of pump fakes with the bonds going back and forth. But what do you think about playing the bond futures? Because I've been buying 10-year long futures anytime I get my impulse, but that's like extreme leverage at that point, though. I mean, for anybody watching, don't.
Again, it's too early for like let scale into that as we get to 110 and like really take it above 110. But then don't you have the other issue? I mean, I'm Johnny Foreigner, yeah. I mean, I'm sitting in a French island in the Caribbean. But don't you have like don't US tax citizens have? It's difficult putting it into a tax wrapper, the futures, no?
No, it's actually I think you actually get way better tax incentives for futures. So
is that because you just lose a lot of money and if you get a big tax write-off?
They actually just give you, it's like, I think because it's not recognized. I think how they recognize it, it just allows you, like, you could take way more losses on futures and then the gains, like, they just write off like dollar for dollar, just how it balances out. I mean, I've only had more positive tax advantages from futures than not, but I haven't really done anything too crazy.
Okay. Well, I mean, I ain't your accountant, but the basic message. The basic message here is we've got an idea. We've got a kind of an insight. We're staking the ground. We've had a year where, despite the hysteria about inflation, we haven't made higher yields or price lows. Okay, we're buying like an asymmetric, which is to say we have a defined loss. We're comfortable with that. Mm-hmm. We've got a lot of time for it to play out. The loss is not going to explode on us because we've got a lot of time. And then if the price starts to get some mojo to the upside, then we're going to come in. And for me, my first thing would be I'd come in and I'd probably take a physical position in that ZROZ. And then as we climb that thing out of the hole, we might be looking to scale into your futures. I mean, that's the way we're rehearsing. Investment is all about your plan.
I feel like because with all these bond plays, I feel like the problem is that a lot of people want to just buy it and think every news event is going to be that confirmation when. Like it seems like we're looking for a confirmation that is going to be way, way bigger, or it's potentially a couple more months out, even up to 2 years out. All right. So I think so what we were just saying though before, and I think this is good info because I think a lot of people right now, when it comes to these bond trades, they're looking for something immediate. They think it's going to be right away. I buy it. The next piece of bad news is going to make it go up. But it seems like this confirmation is going to require time. And I guess it's still, what do you see? You said we stake the ground. I mean, where do you think the bond trade is at the early stage? Is it just sprouted? Is it, was it germinating? I don't know.
Yeah. So my interest is peaked in the bond trade because we've had I call it mean reversion. Okay. Now, mean reversion means it's like fallen a lot, is on its ass. Okay. Now, if we were talking about an individual stock security, an individual like corporate bond, I wouldn't give a damn because there's too much idiosyncratic risk embedded in individual names. But we're talking about the center of the universe, the macro universe. We're talking about the risk-free rate is presently over 4% on, long maturities. And I think there's a profound misunderstanding of inflation. But anyway, so you were talking about trades. And again, I want people to think more like a pro. And I want to call it quadratic investment. The other name that you see is permanent portfolio. I don't like the word permanence. The problem I think you alluded to that a lot of your people, they buy something, then they're wedded to it. They're like, yeah, this is my position. I'm not going to let it down. It's like, it doesn't know that you love it. It doesn't know. Okay. You're allowed to change your mind. Okay. So anyway, on this quadratic thing, if you're investing, I would recommend, right? You think of the world in terms of 4 segments. You've got your equities, you've got your US government bonds, then you've got a quadrant which is alternative assets, and that's your bitcoins, your gold, your silver, your private equity, your real estate. Yeah, I'm probably missing something. And then on the final bucket is your cash. And you might take a decision to like which cash. You might want to kind of bet on the dollar going up versus, for me, I'd bet that the Chinese currency is weakening. So for me, okay, I want to have a position in all of those 4 quadrants at all times. But the challenge is how much that I put into each of those quadrants, okay? And I've got to use a bit of macro wisdom, and I've got to be looking at charts, okay? So when I look at equities just now, I'm not interested. I'm not interested. But I've got to have something. And so I'd have, if we're talking about 100% portfolio, kind of have like 15%, maybe 20% in equities, but they would be like agricultural equities, gold mining equities, silver mining equities, uranium equities, oil equities. Yeah, you get the drift. Commodity equities.
What about?
I've been doing this. If you go on my Twitter, you'll find my pinned portfolio, and you'll see this. It's the last 3 months. It sucked. I'm not in it for the first 3 months, okay? But that's what I am. So maybe I've got 15, 20% in that big quadrant that we call equities. If you turn over to the next quadrant, US Treasuries, right? Well, like I said, the TLT and the long dated stuff is halved in price. Like we've taken all of the price gains of the last 15 years, we've taken to behind the woodshed, and we have obliterated all of the gains. Okay, I think that's an opportunity. So in my allocation, that's my biggest risk allocation. I am really hot for that. So I was always going to have a position, but now I'm going to have a really big position, right? So if we're talking about 100, and I said I got 15 in the commodity equities, I'm going to have like 55, 60% in the TLT, or presently I'm going to have a 2% option premium, and who knows, I'm making these numbers up. I would hope 2 or 3% gives me a delta position of like carrying a big bond position. Okay, so we've done 2 out of the 4. The third one is the alternatives. How much would I have in alternatives? I think I said too much in my original portfolio. I think I said 20%, and I said 5 in gold futures. Okay, and then 15, and it would be half and half. I'd have the sleazy grayscale Bitcoin. I'd have the sleazy grayscale.
Do you like
Ethereum.
that? Do you like that for the arbitrage, or are you there for the exposure? Like, are you looking for the actual crypto exposure on that, or are you one of the arbitrage believers that you get paid no matter what?
I'm not an arbitrage.
Okay.
No, I mean, I don't believe in anything. I'm in it because Bitcoin was what, 67,000, and today let's round it to 25,000.
So why not? But what do you think about
So
What do you think about MSTR? because they're like a ghetto ETF of Bitcoin.
What is MSTR, Josh? Tell me.
MSTR, the company, what's his name? Is it Novogratz or Michael Saylor? They were the consulting company. Then they pivoted in 2020 and they decided to sell corporate bonds and they raised all this money to buy everything in Bitcoin. And then they.
Oh, the sailor guy.
Yeah, we always say that. That's the joke on our channel because we literally always say, what do they even do? Nobody, like, we don't even know what they do. They just hold Bitcoin. That's it. So he even said that on Bloomberg.
The sailor guy, he had he's a bubble guy, but he explodes. He had the original software company. God knows what he does. He went like from 0 to 1,000, then he went all the way down to 0 again, and he's done the same thing with Bitcoin, and the company kicked him out. I mean, he's a good speaker. He's got some good ideas. He's a really smart dude. You know what, Josh? Sometimes you can be too smart in this business. Wow. And I think that's where he suffers.
Yeah, I met a lot of people way smarter. 100%.
Yeah, like my franchise I'm not seeking to outsmart the smartest people on the planet. I mean, that's just dumb. What are the chances I'm going to outsmart the smartest people? Okay. Instead, again, if we're going to weaponize the people watching this, consider to yourself, why is it that super smart people don't always get it right? In fact, they very rarely get it right. Okay. And so kind of work back. And then what you realize is the beauty of life is it's strange, like weird things happen. And I kind of sit there and I try and conceive of weird, strange things. I mean, it's really weird that only 5 people in the world understand money. You would think there would be more people. You would think the Federal Reserve understands money. You would think hedge funds understand money, but they don't. I mean, I think we were talking off camera. They're thinking about shorting sterling, and keep that thought. But if you are selling British gilts on the basis of the inflation print yesterday, and their inflation was disappointing, it was higher than expected, let me tell you something. You do not belong in the investment world. You're an idiot. Okay? Well, there's a lot of idiots in the world. So that's our angle. So we're not going to be overwhelmed by the guys in the suit and their fancy talk on TV. And half the time, I don't know what they're talking about, Josh, right? But I know BS, and they're full of it. Okay? So where were we? We were in the third quadrant, the alternatives. And, to the knowledgeable people watching, they're like, Grayscale is filthy. They charge a 2% management fee. And then it's trading like 40% below. So
yeah, that's why I was saying, why do you choose them? That's why I had that question.
Yeah. Okay. So let me answer that question. Because I dream of the day when we no longer have Gary Gensler as head of the SEC.
Bro, I'm scared to
maybe
talk
that
about
day is going to be. Yeah, I did. Hey, Gary, sorry, but I'm not kissing your ass. And it's paradox because Gary can't. Josh, look up who's the owner of the Grayscale. He's another.
Oh, Barry Silver. I already know Barry Silver.
Barry Silver, right?
Digital Galaxy.
Yeah, I mean, I'm going to mind my language. So Gary doesn't like Barry. Okay, and I get that. I'm not beefing on Gary for that. But Gary is a suit, and he worries that if he allows Barry to transform the closed-end fund into an ETF, so Barry wants to turn it into an ETF, and Gary won't allow him to do so because he's worried that he'll make it easier for the real folk to buy Bitcoin. But actually, if he turns it into an ETF, I think the grayscale, I'm going to get these numbers wrong. Let's say it's got 10 yards. Let's say it's got 10 billion in Bitcoin. I'm sure that's wrong. If they transform it into an ETF, I swear 80% of the money will leave. It's just trapped. So the trade in grayscale is we get a kind of smart SEC chairman and they allow it to turn into an ETF. And so I'm buying Ethereum and Bitcoin at, on the waterfall. They've fallen considerably. They could fall further, but I'm kind of protecting myself with the 40% discount to the NAV. And then in terms of crystallizing a profit, I've got two things. I've got possibly they get ETF status, and everyone watching this like, never gonna happen, never gonna happen, never gonna happen, right? Again, life's capricious. Like weird shit happens. So who knows, right? And then secondly, why in the alternative space, why am I talking about Bitcoin? It's because there's probably $100 trillion of value or market price in, real estate, private equity, gold, and Bitcoin and index-linked securities. It's probably more than 100 trillion. And I think the total sum size of Bitcoin today is less than $1 trillion. Yeah, I mean, it's what?
Oh,
You're
yeah.
probably you're better in the maths, but like 21 million notional coins, and the price today is 27,000 or something.
I haven't checked in a while. I mean, let's see.
I think it's
No,
no more than $500 billion.
you're right you're right on the money. Right now, it is 512 billion, half a
Okay.
trillion.
And I know that gold is like 11 or 12 trillion. And I know that it, like in that quadratic framework that I'm describing, I've got a menu of choices and they add up to 100 trillion. So to my mind, the only interesting, I want to make money. I want to make money, people. I really want to I don't want to lose money, but I want to make money. And the way to make money, I think when I look at the alternative space, I'm like, why can't it be 4 trillion? It's still going to be much smaller than gold. Maybe gold, don't get me wrong, maybe gold goes from 10 trillion to 20 trillion. It doubles. But if Bitcoin goes from $500 billion to 2 trillion, you make 4 times your money. So for me, I look at Bitcoin, I think I'm at 25,000, let's say, and the tail, the risk tail is we might go to 10,000 or we might go to 100,000. Now, I think the probability that I would assign to 10,000 is way higher in the short term than the other, the 100,000 wide. But I would take that trade every day, Josh. Every day you present me that trade, I'm a buyer of that trade.
And do you care how long it takes? Are you in that for a long time? Are you okay whether it's next week, next decade? How do you feel about that?
I'm kind of patient. I mean, the notion of it being a permanent portfolio is I'm trying to build a portfolio where I don't have to take decisions every day. I'm not that clever, you know.
100%.
It's a bit like, is it what's the fairy tale where she looks in the mirror? It's like mirror, mirror on the wall, who's the prettiest of them all? Yeah.
Is that
Snow White? That's Snow White.
I think it is Snow White. I was gonna say Cinderella, but no, it's Snow White. It's Snow White.
Think of me as the Black Knight, but so the more times you look at your computer screen or you look at prices, and you're like, mirror, mirror on the wall, am I an idiot or am I a genius? And if you ask it like once. I mean, I'm forced on a deviation guy. If I ask it once every 5 years, it says you're just dope. You're just a genius. If I ask it every 5 minutes, it says you're an idiot. You're an idiot. You're an idiot.
Hey man, bro. Hey, I can relate. I feel, dog. I feel. So you give yourself time appropriately. You even understand that with there. So I hope everyone listening takes notes. I really, really hope so. So what else? What else with this quad? Did we even get to the fourth quadrant? I don't even think we did.
No, well, the fourth quadrant is the easy one because it's cash, and you're getting what are you getting in a money market mutual fund today? You're getting over 4%. That's easy,
dude. And once we get past this debt thing, I think it's going to be minimum 5.25 right now. Even on everything short term, if you want to risk it on the debt ceiling, you get paid 7%. It's insane right now.
Well, I mean, the feds are paying you 5.25%. I mean, they are the banking regulator, and they're doing more to bust the solvency of the banking sector than any other malevolent force in the universe.
Yeah, but then it's like they were like, we want jobs down, we want all this, and then when it happens, they will step in. They bailed the FRC, all of that. And even then, let me ask you a bank question. What do you like? Last time we talked, it was in the middle. We said the banks will start protecting against themselves. It'll tighten things. It's been a month, and I think we need way more time to analyze it all. But how do you feel about it all so far? Even like PacWest, they're selling assets now, and the market's loving it. If that happened when we made that video, that thing would have been in receivership by tomorrow.
Well, so the feds, they're like traffic cops. There's been a car accident, and they're like, "Hey, folk, keep moving. We got this. Keep moving. Yeah, keep buying, keep taking risk. We're the Fed. We got this." Right? It's a bluff, right? What we saw in March was the beginning, not the end. Why do I say that? Because the Fed just hasn't learned the lesson. So let's go back. Let's go back again and people, you get sold lies every day.
Only way to get tricked off bullshit is to believe in it. In the words
you gotta own it. You gotta own your opinion. Your opinion. You can't be borrowing from the guy on TV. Yeah. If it goes right, you're the architect of your success. If it goes wrong, you're the architect of your loss. You gotta own it. Okay, that's what I do. One of the lies is that the PacWest, the Silicon Valley, et al., that they were malign actors, like they just had the worst, dopiest management. I push back against that. I'm not saying these guys were geniuses. That is not what I'm saying. I'm saying to you, were those guys more lame than all the other guys managing banks? I don't think so. Okay, so that's my first point. Secondly, the insolvency of those institutions is, I would attribute the principal factor is the Federal Reserve. But what I can state to you factually is that the increase in interest rates over the last 14 months, the magnitude and the speed of it is greater than anything we've ever witnessed in Fed Reserve history. Okay, they've never done this. There's a good reason why they haven't done it, because it is profoundly destabilizing to the profitability of the banking sector. And when you begin to damage the profitability of the sector, given its leverage, you begin to threaten its solvency. And that's a systemic issue to the economy at large. So when the Federal Reserve typically seeks to raise interest rates, it tells people, it bores you out of, it bores you to death. And then it does it, and it does 25. And then it waits, and it does 25. And then it waits. It takes a long time for them to get there. This Fed just went boom. Okay. And so the problem there is the banks have got a loan book, and that takes 18 to 24 months to reprice. You've extended a 30-year mortgage. You've given a 10-year loan. Credit cards. Takes a while to reprice that. And if you're the bank, if you're to match the Federal Reserve, so the Fed goes 50 and you go 50, the Fed goes 50 and you go 50. Well, suddenly you're paying out more on deposits than you're receiving from your book, and your profits are dead. Okay, so that's not good. So that was happening, and then you had this hold to maturity thing. So there was I'm not dishing it. It was a kind of reasonable idea. It's like, okay, banks, if you own treasury securities and you don't trade them, you hold them to maturity, then you don't have to mark mark-to-market losses on your book, because who cares? You're going to crystallize at 100 par. Okay, so that was, and so they owned a lot of bonds. But then the Fed goes crazy, and the bonds sell off. Then of course we discovered that the iPhone has become a weapon of banking destruction, and suddenly everyone can pull the money out. And the Fed's offering you 5.25%, and JP Morgan's offering you 50 basis points. What are you going to do? You're going to give Jamie the finger, and you're going to put your money in a money market fund. So all of that coming together forced these banks to do the impossible, which was to have to sell securities which they deemed that they were always going to hold to maturity. And when they did that, the game was up. Like they were insolvent. And before that, they called Goldman's like, hey, Jamie at Goldman's.
Jamie,
we need to raise more capital. Yeah. And Jamie's like, yeah, that's what we do. Hold on a second. I'm going to phone my buddies at hedge funds. And the buddy at the hedge funds was like, no, it's the last thing I want to do. And so, reluctantly they go bankrupt. But the author, the phone is a weapon of mass destruction. But I mean, the nuclear bomb has been the Fed. They've just blown the system. And they don't get it. In the subsequent meetings, they should be saying, we're really, really sorry. We really messed up. We're cutting rates.
Okay, so, I have another question on the banks, but now we've brought up what the Fed does not know. So what do you think about the last meeting? Was that a pause or no? Do you believe the pause argument, or do you believe the Fed, who is contradicting and says, some of us want to pause, we don't want to pause, but we do and we don't? How do you feel about May meeting?
Okay, let me just generically discuss meetings, calls. We mentioned NVIDIA earlier. Okay, let me tell you what I did not do today. I did not listen to the earnings conference on NVIDIA. Okay, that's the last thing I want to do. I was kind of, again, I trade reputationally because all my capital presently is in the houses that I build here. But I was out saying you should be long NVIDIA. The thing's it's a moonshot, and we saw that. Am I listening to the conference call? No, I'm not. Like I would have been selling today. Today we absolutely slammed, we smacked, we took down the conceit of people who believe just because they've got an idea they can go against the trend. That is a conceit, and the conceit cost them dearly today. All right. Secondly, Federal Reserve meetings. I don't look at the screen. I don't listen to the interviews. I will not give them.
You don't even validate it. All right.
I will not validate. I will not recognize it. They are destroyers of the livelihoods of good people. I will I'll tune in when they're like, "Oh, we're really sorry, we're cutting rates." I'm like, "Yeah, too damn late.
Wow. So you don't even care about the meeting. You did not. You were not up to date with the May meeting, nor would you legitimize these evils of the Fed.
I'm not legitimizing.
All right.
But let me tell you about the.
But a lot of people think we're gonna pause. Like right now, I mean, I shorted the Fed future, so it was right after May, the Fed futures went to a 99% probability that it was going to be a pause. I shorted it. Now it's 50-50 today. But what's your take? Where do you stand? Pause or no for next?
I thought we were moving back into like a 60% or so probability that they may hike. I don't know if you see.
I think it's like 60, or it was 55, 40 something. It could be, give or take, but give or take, it's around there, I think, right now on June, and then even July's odds started moving. No, right now it's 48% for pause, 51 for a raise. But that's obviously
it's 50, it's 50-50. Yeah, it's 50-50. I don't believe they want to. I believe they want to pause.
You believe they want?
They don't want to do anything. They don't want to do anything. They're cautious. They should be cutting, but they're just not that kind of people.
Yeah.
I
But
mean,
what about so
you know,
now let's jump back to the bank thing because you were just explaining it all, and again that's how we got into the Fed. So with the bank thing, you said this is just the beginning. Then I mean, how long, like, what kind of time frame are we on from here now? And it's like so, and you don't think they could recover that quick? You think the Fed telling everyone keep on driving, it's okay, we got this fixed? You don't think there's a quick recovery scenario in that, or is it possible the bandage of words actually works?
it's impossible, Josh.
Impossible.
I mean, I don't deal in certainties, but there are one or two certainties. It is impossible. The So take Pac West. They were offering a CD 4.2%. I think it was around about the 10th of May. And 10 days later, they were offering 4.9%. What does that tell you? They need money. They're running out of money. Okay, what else did they do? I think you mentioned it. They had a fire sale. They sold property. They sold
Dude,
property at a
I'm
loss.
just confused because the first 2 months, at any sign of raising capital, selling anything, the market vomited a bank stock if they did that. And then all of a sudden, wrapped up in this debt ceiling optimism, everything else, it was just they sold these assets and the market loved it, which was quite surprising.
Did the market love it? I mean, you use some of these terms. What is the ETF on the bank sector again? The
Uh,
regionals or whatever.
XLF or the regionals is KRE.
It's KRE. Let's look at KRE. So we're going to be bringing this chart up. Obviously, if you're on the audio channels, you won't be seeing it. Our apologies. So the point is the KRE fell from 80 to 35. Okay, and it's an index, so it's it has less idiosyncratic risk than you'd associate with one bank member. So 80 to 35. That's
Nothing with
40.
love.
Yeah, but it's fallen 60%.
Yeah.
It's like Bitcoin's fallen 60%. So that's kind of like, okay, folks, welcome to the future. We just introduced you to the insolvency of the banking sector. And of course, then people go, wow, I didn't know that. Wow, short. And it's like, come on, take it, please breathe, right? You're too early. Not you're too early. No, you're too late. So where we are just now is the damn things have to rally. So 35, where is it? 40 maybe becomes 50, becomes 55. It trades back up to the 1 year, the 252 moving average. And then everyone's like, oh my God, like the Fed's a genius. Like we were like that asset capitalist, that guy's a fool. And you start buying. So think of what we've done there. We've sold at 40. We're buying at 55. And then it's going to trade 40 because when I look at this thing, I like to look at a lot of data. Heavens, I think I was thinking of another chart. Let's look at, what was the other one you said, XLF?
XLF. That's the big banks. So that's the JPs.
I think I get longer. I get longer data.
Yeah, they did way better. But the regionals are still I say love on these individual days. There's big rallies, but they have not shown any real.
No, I tell you, I'm looking at the chart of the X. Well, we all are because we'll bring it up. I'm looking at it for the last 23, 24 years. And if you knew nothing, you would say it's a screaming buy. So, that's an information point. Why is it screaming buy? You'll see on the chart that it made a high, obviously, going into 2007, 2008, when everyone loved the banking sector. And then it took until the COVID rally. It then overcame. It traded a new high. So the high for that index was. Are you seeing it, Josh? Is about 32. Yeah, about $32. I'm using kind of.
Are you on XLF or KRE?
Forgive me, I jumped to XLF because there was more data.
XLF, I see it's like 30.05 in 2007.
Yeah, but if you put it onto kind of monthly data, so it smooths, I'm seeing $32. 30, I mean, who cares? 30, 30,
Yeah.
30, $31, yeah. It surpassed that in January 21.
Mm-hmm.
And it went to almost 45. And then it is, and now it's pulled back to, back to the breakout level. So if I didn't know anything, and maybe this is telling me, and I'm not I'm not being facetious here. I mean, that chart has to be taken seriously. That is still a chart that is in its that is bullish. I just think that I know something. I know a little bit about macro, and I think that chart is going to have to revisit 20. So again, we're talking about XLF, and I think it has to go and check something very prominent in this chart is the low versus the all-time high. So you had a trend, you had higher lows, and then the big high at 44. And so if this is going to fail, it's going to trade down at about, I think it's going to trade down about 20. So yeah.
That's still
But
not.
I'm concerned that chart. I'm concerned that chart's good. But if I put in, is Freeport McMoRan, is that still separately listed? I'm looking for a commodity equity.
FCX.
FCX.
It used to
Yeah.
be. I don't
Yeah,
think.
it's still,
Yeah, no, it still exists. FCX.
and it's
Freeport.
all right. Yeah. Let's put in Newmont. Newmont gold mining. And forgive me, but we're now just like we're all over the. But yeah, this is so. We're now looking at Newmont, and Josh, I'm looking at the data since 1988. So again, I'm a data junkie. I like lots of data, but hopefully, I'm kind of trying to reveal, the mind of a macro investor.
Amen.
And so, what I was saying to you, if you can see again the similar time period, roughly 2021, that Newmont actually made a new all-time high. It got to about $90. You see that?
I see. Yeah, it was. I see the highs at
87 or
86.
so.
Yeah,
Yeah,
86.37.
there you go. I mean, I round to the nearest, yeah.
Mm-hmm.
And you can see that, when we had quantitative easing the first time and gold went on a rip, it got to about a high of 72. And that looked really exciting because it had overcome the previous high of 1997, 98.
Mm-hmm.
But my point is, so I'm always looking for ceilings, long-term price ceilings. And when they get breached on the upside, I get really, really horny, really excited. I think something's changing in the universe, and this thing can double, triple, quadruple. I mean, these are the winning kind of chart formations, but they don't always work. And you see that Newmont, if you bought the breakout and you trade it to 86, I mean, it's on his ass. It's like halved.
Yeah.
So actually, when I look at Newmont, and it's amazing, we didn't rehearse this, we've just made it up, but I think Newmont and XLF look very, very similar. Like the equivalent point for the banking index in the Newmont chart is like
They're at their
60,
2007.
61.
Yeah.
It has come back to the breakout level. And I think, it's going to follow Newmont down to 40. I mean, I'm not saying bank stocks follow gold stocks. I'm just saying
Yeah.
in terms of the chart pattern. And again, chart patterns are very important because I'm a clever, curious person, and if I don't have charts saying you're wrong, then I'm going to be wrong because I've got to keep listening to the wisdom of the trends.
And this chart is
Anyway,
crazy. I pulled out the max chart going out. I see why you like it.
yeah,
You guys should look into this. It's
yeah.
that's a wild chart of wild swings since the 80s. So it goes pretty
I know,
far
but
back.
but the real amazing thing about this chart, it's very rare you find this, Josh. It's really, really exciting because you've got that high from 97, let's say. You've got the high around about 2005. You've got the high 2011. You've got the high 2021. And each time it's failing. But one of these days, that sucker's just gonna put the thrusters and it's gonna go to Newmont. We'll see. But I mean that chart pattern, I've traded that chart pattern. I'd keep coming back. I'd want to buy Newmont. I'd want to buy it at 40.
So in that same respect though, in a weird way, does that mean you're excited about bank stocks in the future then?
No,
Or
no. Well, again,
well,
we'll
after
bring
it
up.
drops, let's say XLF, if XLF went to 20, would that
Oh, XLF at 20.
yeah,
Yeah,
that's what I'm
yeah,
saying.
baby.
I'm not saying
Yeah.
right now. I'm saying if we actually get what you just explained, and you get that chart pattern, you get the back down, and then you have the opportunity to go back, would you be what's the word, discriminatory towards bank stocks after everything? If it went to 20 in the next year, is that it? No matter what.
I mean, get closer. Look at me. Like, I want to. I am not a person of prejudice.
Amen.
Yeah. I believe me, I might beat you up today, but tomorrow, like I'm gonna love you, or vice versa, kind of thing. I could turn on a dime. You have to be able to turn on a dime. So I just don't like. I don't like Jamie just now. We're gonna bring up that bank chart again. Let's go back to XLF. And
I don't
the
like
bank
Jamie.
stock index is trading at 32, 33, and I think it's going to trade 20. I think it's got 50% downside. But if, 50%, 50, like I won't buy anything, but if you
There's
have
a
a
lot on
profound
that
drop,
list. There's a lot to consider at 50% off.
you're
I call
right.
it the
You're right.
bargain bin. That's why I bought. I did it end of last year. I bought like Redfin for $3. I bought Meta at 90. Everyone got mad. They were like, "Why are you buying it?" I'm like, "Dude, this is the bargain bin right now. This is literally big lots." So I feel I'm
Yeah, I mean, yeah, the Meta and stuff, like the bigger names, they're more prone to get mean reversion back. But that's what I'm doing. In that, um, I'm I'm licking the razor's edge on the ownership of treasury bonds because they've fallen 50% in price. Yeah.
yeah,
I'm licking
100%.
the razor's edge in Bitcoin because it's fallen 60%. Yeah.
I feel.
And then and they're my big allocations. But like I say with my quadratic expression with the four quadrants, I've got to populate. Why have I got to populate? Because it may be that the Fed at the next meeting cuts rates, and it may be that Newmont goes on a tear. Commodities might go on a
Oh
tear.
yeah.
Equities might go high. I don't think they will, but it may
I think
happen. And so I've got
temporarily
to have some.
they'll get hyped.
Well, I was kind of saying I think the most important question today being Friday, with the let's see the future with the resolution of
While
the
we were
debt
doing this,
ceiling.
McCarthy says they haven't got a deal. So there was actually even some bad
He's going
news.
to yeah, great. Well, the more he has to say that so that we can come in tomorrow and we can stonk the stock.
For real.
Because believe me, without a deal, we're going to break things. My buddies and I in risk assets, we're going to break things until these bozos hear it.
Well, yeah, and there's not that much time left, but even then, I think we've covered a lot. I have one question. I don't know if you want to end it here or not, but you tell me what you think about this question, because we brought this up last time, and I think it's an interesting development now. Is the yuan above 7 saying anything, or do we ignore it? How do you feel about the Chinese yuan or renminbi?
So in that fourth quadratic kind of bucket, I am long the US dollar and short the renminbi. So that's been a positive thing. I have maintained for a long time. I'm a broken record. The problem is I see things and I see them early, and then I've got to be ridiculed by the many until I'm vindicated. So as you know, the reopening of the Chinese economy has been really boring.
Switch gears.
And their housing market is busted. The housing market, new build was accounting for about 30% of Chinese GDP growth. That's not coming back. Demand domestically is just weak, because they keep stealing from the citizens to build stupid bridges. I'm going to bring up a chart, which is the number of new bridges built in one of the provinces, obviously a poor province, or poorish. And look at this chart. It's absurd. Like, we're not looking at it just now in real time, but Josh, it's like, imagine it. It's
How
like
many?
that.
How
It's
many
insane.
bridges are they building?
I mean, I hear it's a big place, but so the principal focus on GDP expansion is trading with the rest of the world, and they're trying to kind of risk proof that by keeping their currency weaker than it should be. So I think they want it to trade at 8, just to give them an extra kind of boost on the export sector. That, and there's too much red cabbage there. Let me tell you, there is too much red cabbage in China. If you were to convert all the red cabbage in terms of Chinese M2, you're talking $40 trillion. So total deposits in the US are $18 trillion. So the Chinese have got more than 2 times the money. They've printed more than 2 times the money.
And they don't have any. They don't have any memes about their central bank chair about printing.
Well, this is why they've got a close. We call it a closed capital account. It's impossible for Chinese folks to kind of the one thing you want to do. You're sitting there and you've got an apartment and it's gone up 10 times, yeah. And like if you could sell it, I mean, you could buy half of Australia or something. And so there's a lot of ingenious people trying to work a hack to get money out. I mean, you see it via Hong Kong. The Hong Kong peg is kind of perilous. They keep having to intervene. That's Chinese folk. Like I've got to get rid of red cabbage. So yeah, I think it's real. I think it's bad. I think it's deflationary. I think it creates more distress on ordinary real folk. The distress being that you can't get a pay increase despite the evident higher price of food, etc. Yeah. And that your boss might fire you and transfer it to the cheap. It's only cheap because of the currency. China is not cheap because of productivity. Yeah. It's a very calculated mercantilist regime, which is trying to it's trying to do better at the expense of you. And I think we got to reject that system. We will reject that system.
Would you say 7 is a warning signal yet? Does that mean fireworks or no? Because every time we get the yuan in the last I think the last 5 years, every time the yuan goes above 7, we've kind of had some fireworks within the next couple of months.
Well, I mean, the first and foremost, again, we're back looking at the chart, Josh. The dollar CNH and what we're presently looking at. If you look at this, so I'm representing it as a white up candle, so that would be dollar strength, and people looking at it will see that it's a big move. This is a currency that's normally tightly controlled. I mean, the range here is not very high. It's kind of 630.
And I've been saying this whole time too. The difference now is that the yuan is this weak, and then it's not like the dollar and everything else is that much. Like the dollar's not as strong as it was last time. The yuan was at here. I mean, our dollar was a lot higher, or I guess a decent amount higher.
I mean, again, one of the things I'll stay on this renminbi chart for a minute. You can see that where are we? Like last year, it looked as like, to your point, it went through 7 and it went to 740, and it was making new lows on that price series. And the market doesn't want you to make money. The market is an evil brother, all right? It just wants to take you down. Always be paranoid when you're in markets. Somebody wants to take you down, okay? And so it offers you, it was like, hey, Hugh, you're so right. Like, we're busted. I'm like, yeah, you're right, you are. You're going to 8. And it goes to 740, and I was like, nah, I fooled you. I fooled you again, and I've just appreciated, right? And that's what happens. So the next time through, clearly on this chart, we're going to go through 720, we're going to go through 740. So there's like, again, you prep, you say, hey, listen, I think it's going to 8. I've got a position. If it closes through 720, I'm going to add to my position. If it goes through 740, I'm going to maximize my position. So we've done that. Now you mentioned the dollar. I'm going to bring up the dollar index, and heavens, what am I looking at? I'm looking at the whatever happened to the Dixie Group? That looks like
the DXY.
No, but there's a stock called the Dixie Group, and it came up on my screen by mistake. God, DX. I'm looking at the futures, the cash futures. The interesting thing, we've commented on the debt ceiling. We've commented on the uncertainty that it breeds. Yeah, with that people don't really want to get in front of it. They don't want to buy stocks. They don't want to buy long dated treasury bonds. And in fact, everyone's been puking the 1 month and the 2 month cash bills. But the dollar's been rising. And again, think of it, the 5-year CDS, or the default protection swap, has been surging, and yet the dollar's rising, right? The dollar's the truth teller. And so I don't know what's the truth in the fact that, the DXY is, it's back above 100. It's back above 102. It's back above 103. It's back above 104. If it goes through 106, it's going back to 114. If it goes through 114, it's going to 120.
Yeah, that's what I said. I'm waiting for like 106, 107. Once we get above there, I think now because we start talking about it a little more, but it's still, I think the China stuff I think we're going to maybe see more currency volatility by the end of the year. I feel like compared to last year, the FX volatility just fell off the map. You're not seeing the same currency swings we were seeing last year. That was insane.
Yeah. The other line factor is, I don't know if I dreamt this. I get lots of Instagram messages.
I know what you're saying.
Yeah. Sadly, I don't get Instagram messages from girls in bikinis. I get Instagram messages from guys wearing my hat, which I appreciate. Thank you very much.
Amen.
But take a picture of your girlfriend wearing the hat and send it to me. But, did I dream it? But was there a story in the last 24 hours that there's now another COVID
in China? No, that's real. That's real. Yeah. No, that's not a dream. In the 2 times in the last 48 hours, there's a new COVID wave in China that is restarting.
Well, okay, here's how my mind works, right? So it's a bit funny that as the economy mean reverts and sits on its ass again, and it looks, the most important thing for the Chinese Communist Party is to preserve their autocratic regime. They don't care about anything.
Save face. That's it.
They save face, right? And they're losing face because the economy just got no mojo. Why does it get no mojo? Because the Fed has bankrupted the bloody banking system, right? Got no mojo. So you're like, we've built our communist reputation in China on the back of our GDP is just bigger than your GDP, or the growth rate is bigger. We are virile. We're so virile we've had to ban folks having babies. I mean, they've changed that policy. And then suddenly, someone you get a call and you're like, what? And it's your advisor, and it's like, it's not looking good,
dude. And I was talking about that today because if you remember how this year started, that was the most bullish trade. People were more confident in that than telling me last 2 weeks that the Fed was going to pause. They were, dude, the buy China, hedge funds, every analyst, everybody piled into that. So,
not the asset capitalists. But so you can imagine, so it's like you're trying to save face, and it's like, I don't what do we do? Do we build another bridge? Let's look at the bridge chart again. I think we got enough bridges. Do we go to war with Taiwan? I'm like, hold that thought. And then someone goes, a new variant pandemic? That's a kind of cool idea. That's a diversion. Let's close the economy again.
I like it.
Right. I mean,
all in
that's
favor.
What you do. Now, I'd much rather they invented, who knows, a new variant. Let's hope it's an invention. But that's where we'll wrap it up. But another trade that I put out there was buying. I think again I got to 2025 and I was buying a pretty close at the money, maybe 10% out the money put option on Apple. I don't have a beef with Apple, none whatsoever. But my buddies here on the island were like, yeah, like we watched that Elon Musk interview, and he's like, I mean, I speak to these guys. I mean, they're kind of doing that, and whatever. Let's hope they don't with regard to Taiwan. But how do you hedge that risk? I'm not saying it's got to happen, but you kind of maybe have a responsibility to have a Taiwan hedge, something that goes in the money. Should all, I mean, again, and don't, I'm not downplaying it. If God forbid that were to happen, that would be the most serious, worst financial event in my lifetime. I can't
really. Do you think that? You think Taiwan getting invaded? Do you think that would be worse than a debt default?
Yeah, because both take you to zero, right?
Yeah.
Both
one's just a real conflict. That's it. The other one's just political.
Well, yeah, but in a conflict, the brothers die, and the sisters die. We don't. So, like, if I had to choose between them, it'd be like a debt default.
But it sounds similar, kind of the logic though, where it's like it shouldn't happen, but we should think about the downside risk.
But I'd assign a zero probability to the debt thing happening. I'm probably making myself a profound hostage to fortune, but I can't assign a zero. I can't assign a zero probability to the China.
Yeah.
So, but anyway, so I had a 160 put on Apple. Apple is really like if that happens, there's no new iPhone coming out. The 2027 Apple iPhone is going to be suspended until 2047. I'd go long iPhones, people. But yeah, that would be a trade. And people again, you've just got to say to yourself, like, again, asset capitalism and how we deal with the smartest people on the planet. That's not us. But we're super smart in a different way. We've got different trades, and so we got to think out of the box. And then we go looking for hedges just in case life is capricious. So I think that's a good place to end.
Amen.
I want to thank you. You always take me higher.
I love it, man. I could do this for days. I know they like doing it. I think this is gonna be our ending. Y'all better show some love to Hugh as well. Again, and next time we are gonna get you on live, Hugh. You are gonna have to call in live one day when we're gonna be doing this live one day so we can hear from you. But thank you again as always. Another great one. And that is it, ladies and gentlemen.